So this is how it's gonna work. We're gonna do a 5-minute intros. So each of the advisors will take just 1 minute to present themselves. Then we're gonna go over the pitches. The pitch will be 5 minutes. Please, guys, remember that. Keep it right under 5 minutes. And then there will be an 8-minute Q&A. And we're gonna respect this structure, right? It will be Michael, Manuel, Brooke, and Robbie. So also the same with the introductions. We don't have Michael now, so we probably need to start last. So Manu, if you wanna start with your intro, please go ahead.
Yeah, sure. Thank you, Tomas. Well, my name is Manuel. I am from Argentina. I've been in the software engineering industry for forever, since I was a kid. I work in different type of industries, in services, consultancy, product, mainly e-commerce, one of the biggest e-commerce in Latin America, and then got back to services, working for startups for the United States, mainly the Californian area of Silicon Valley startups. Then I was bored and I said, okay, let's do something funny. And I was offered to create a unit about blockchain, private blockchain in that case, back then. And it was when Hyperledger was born, just plain Hyperledger. I started with that, then I got bored because it was going nowhere, only pilots, prototypes, and too early. And then I ran into Ethereum back in 2017. And that was the end of it, of my search. I left all the 2 operations that I was running in Argentina, around more than 60 people. And I focused completely on creating a brand new unit to build, especially from the engineering part, to build on public blockchains, specifically in with Ethereum. And since then, I was exposed to many projects, very early stage projects back then, like Aave, Maker, Kyber, and a lot of projects that are right now are top 10 and top 20 by TVL. And lately, a year or something, last year, I quit my job. I say, okay, this is fantastic time to fund something by myself. And a group of friends said, okay, let's create this crazy startup blockchain startup called BootNode. And we decided to accelerate engineering and development for early stage projects. Those teams that are struggling with closing a round, with growing, hiring, and shipping, most importantly, to keep the promise. And we did it in a different way. So we had a round, so we don't have to work for the money to invoice the teams. What we do is to partner long-term and take part of the risk and align incentives by getting equity of any kind, from private equity to tokens to revenue share, NFTs, whatever it takes to align the interest and go the extra mile.
Okay, Manu, if you can wrap up.
Yes, and that's it. That's it about BootNode. We shipped like 10 projects so far. Yep.
So Brooke, if you want to go ahead.
Thank you very much. Pleasure to meet everyone. Brooke Furst, I'm speaking to you today from the United States. I reside in Connecticut, just outside of Manhattan. I work for Nixon Peabody, which is a global law firm, but I'm not a lawyer, so that means we can talk all day and I'm not going to send you a bill. Anyway, my background actually is on Wall Street. Before joining Nixon Peabody 5 years ago, I raised $1 billion in capital for various investment firms, funds, and strategies. Today, I do 2 things that are of particular interest to the folks on the call today. One, I lead the firm's blockchain and digital assets marketing effort. So all projects run through me. I'm kind of bringing the right resources in order to help your ideas come to fruition. And second, and perhaps more interesting, or of equal interest is the NP Capital Connector program that I run, which is a complimentary, read that as free, service that introduces companies looking for capital with investors and provides investors with deal flow. So it's industry agnostic. So I do blockchain, but I also do just about everything else. And it's from early stage to well-established companies. And happy to be a resource and hear what you all are doing. Thank you very much.
Thank you, Brooke. So Robbie, do you want to go?
Yeah, sure. Hey there, everyone. I'm Robbie. I'm co-founder of Defi Slate. It's a educational podcast and YouTube channel focusing on DeFi content. I got started in blockchain in 2016 with Ethereum. Since then, I was co-founder of the University of Florida Blockchain Club. I graduated from University of Florida last year and helped grow that club. And since then, I've been doing the podcast where we speak to founders of different blockchain projects and protocols. We also go to these conferences and talk to founders and interview these projects to get a sense of what they're doing and spread their ideas through the entire ecosystem. We also do some fixed income replacement programs, stablecoin lending, and yeah, starting to build some projects as well. So focusing on education and building. It's a pleasure to be here. Nice to meet everyone.
Thanks, Robbie. Now, Michael, you joined. So if you want to give your 1 minute intro.
Sure. Thank you. Good to meet everyone. I'm Michael Conn, founder of Zilliqa Capital. And effectively, we're an investment holding company focused on the blockchain, fintech, and broader space. So kind of like a Berkshire Hathaway for the blockchain and fintech space. We started last year, closed our equity round in September of 2021. We've been investing since June. Our returns are about 550% year over year. We invest primarily in equity of companies. We're not token speculators, et cetera. We are based out of Singapore. We have an advisor from Temasek, and our board of directors is on our website, and you can see who the folks are there. But we're actively looking at investing, and our most recent investments were in Valkyrie alongside Boney Mellon. And then we're about to announce a deal out of India called JAR with Tiger Global. And that's kind of where we are.
Great, thanks. So now will be the time for EcoPros. So Pavel, the floor is yours. Please share your screen, and we're happy to hear what you have.
Hi guys, my name is Pavel Bashkevich. I'm the founder and CEO of EcoPros. Let me share my presentation. Please tell me if you see it. Thomas? Yeah.
Yeah, it's perfect.
My deck.
Yeah.
Okay, guys. So we are real world project solving one of the problems in one of the most important industries these days, which is clean energy with blockchain technology. We are present in the solar and clean energy market since 2014, 2015, when we launched an online marketplace for solar customers in Poland, where I'm based, helping them choose their solar installers. We successfully helped over 2,000 project owners, either by being a general contractor or a proxy between a customer and installer. We did manage to get 7 million euro of revenue last year. So I think we know a thing or two about traditional business model in solar. We did try a couple of different business models. We learned a ton. We know what works, what doesn't, what is scalable, what doesn't, what isn't, and we now build a crypto module for our marketplace, not crypto only, but blockchain, to help finance solar and clean energy projects in the modern way, let's say. So we did see what are the problems in the market. We did work with installers. We do work with installers and customers and distributors, and not many options, or actually we don't see such an option either in US or Europe to finance your project, either a solar project or other clean energy sources through DeFi. And this is what we want to change. As a investor, you want to secure your capital. Maybe if you're environmentally aware, you want to do this in this market. There's no simple way, and especially if you want to collateralize your loan with real world assets. So this is where I think we stand out. We secure the capital investment either for small investors or gradually also for institutional investors with real world hard assets, as banks do for centuries. This way, the base APY is secured, and then with our experience from the traditional solar market, where we sold and do sell, make money on material sales to installers, we have a really good upside for increasing that APY with combining fintech, so financing of those solar projects, and also e-commerce functionality, selling material to solar installers, and we already do that. So we know the margins. We see a great potential making this project scalable and global, because there's no such project that is really disastrous that you can't finance your solar project on your roof in an easy, and it's not possible to finance in DeFi, and this is the future. I hope we all here believe in DeFi. So I don't know, it's really tight. I've been presenting to VCs a couple of times. We did raise a small pre-seed in 2020 for 350K, but we did have only 5 minutes. So let me maybe wrap
Sorry
up.
about that.
Yeah. Okay. So these are the challenges that we aim to overcome with our project. So basically, as a clean energy project owner, like a homeowner or business owner, you only basically have two options to finance it. Either it's cash or it's centralized old-fashioned banks, which is neither easy, fast, nor inexpensive, at least here in our part of world. Some might argue that second point, that not all the blockchain projects are tied to real economy and are not solving real world problems. Arguable probably, but we do say that, and we do solve problems in the real world. And also ESG investments. It is really popular, and the policy is there, but there's not too many mechanisms, and especially for smaller residential and smaller business owners to attract ESG investors. And last but not least, of course, it's not fast enough to fight climate change. Yesterday it was 36 degrees Celsius, and it's not normal, and it's getting worse and worse each year. So we do provide alternative financing, turning USDC and also fiat through USDC, and connecting this capital with project owners. We do guarantee, and it's important, APY, which is collateralized with hard assets. So we do connect both worlds. We do think that we can unlock ESG investment potential and help with the real world problem, which is climate change. To wrap up, for the past 8 years, we did test 4 different business models. It's not easy. It's an online to offline world, which is not the most scalable. So we learned from that, and we now choose the best scalable strategy. We did have up to 40 employees, over 200 partners, 7 million euro in revenue. This is our knowledge actually in a nutshell. We did from the bottom install systems. It brings money, but it's not scalable. It's hard. We did deliver customers for installers. You have to chase them then for your success fee, or if you only sell leads, it's not a business actually. There's not enough money over there. We are selling material, which is e-commerce basically. It is scalable and it brings money. So we want to combine DeFi financing, which will be secured with real world assets, and make more money with e-commerce, selling material to installers. So this is how it works. We let lenders invest in geography-specific funding pools, letting them decide if they want to finance something locally or maybe a broader portfolio all over the world. Eventually, choosing risk appetite and APYs. Then we move that capital to borrowers, homeowners, business owners. We do plan to verify the collateral and the whole application so that the projects are fundable. This is our part. And the third part is to sell either directly, as we do now, or through distributor partnerships in new geographies, will be much more scalable to installers. And this brings additional money, which helps make the whole project more attractive, because competing with only financing at such slim margins would be hard. If I have any more time, this is
you can use the time from the Q&A if you want. It's up to you. We have a few minutes there. So
okay, please advise. It's my first event at your
yeah.
So
good, no problem.
maybe this one is important, and we can then switch to Q&A. First 2 points here is the investment, so the loan, and we do show that the first part is secure. It's not a great return, so this is what we can do, and it's an example. So in these days we can bring around 7%, which would be still a desired preferable financing for a homeowner to finance solar, at least in these parts and part of the world, and these days with these interest rates, and thanks to material sales that we will deliver, and we already deliver to installers, we already have this secure 100% return. And then on the right, you can see the upside potential given by recurring revenue coming from installers. And let me, last sentence, explain that. If you were a solar installer, would you choose to buy material from a distributor or a platform, a source, which would provide you competitive advantage to close more deals with your customers rather than the usual distributors, if the price was the same, if the payment conditions were the same? I asked the question a couple of times already. It's rhetorical, so with some assumptions I can explain over email probably. We have a huge potential upside which we want to share with our initial investors, because the financing is the fuel here, and the secret sauce is making money on material sales. Chris, my CPO, cannot be here today, so we are preparing a pre-sale of our token, and all that has to be moved.
I think it's also important to mention, this is to connect everyone, right? So if people are really interested, then we can follow up. As we mentioned before, all of the projects will be, mentioned in the site, or your contact details. So I guess we take 1 minute per advisor now, and let's keep this order. Michael, Manuel, Brooke, and Robbie, to give some, your thoughts, your general thoughts on the project. So Michael?
I think it sounds very interesting. I've seen a number of these projects where you have kind of these DAOs. The question I have comes down to the governance and how that governance would be structured. Would it be centralized? Would it be decentralized? How much of a position would you and your team have? How would that work when it comes down to decision making?
I have to be honest that I'm the business person here and
Okay.
fluent really in the solar industry, in the clean energy. So I have to rely on Chris, which is the CTO. We are now actually working out all the details. Yeah, so we have a business. We see where the potential is to make it the most scalable in this industry. We see the competition here in Europe, and we come from this background, and we actually apply blockchain right now. So the DAO is to be decided. Actually, we want to give voting power to our community. An idea, for example, is to let our sponsors, geography specific sponsors, to help promote our projects. Like if we find someone backing our token from Australia might be interested in promoting the project and helping borrowers in Australia or establishing the relationships in that market. Yeah, so as to answer your question, to be decided, the governance and all that stuff, we see and we have proven the business side, and now we are applying the technology, the blockchain technology. So maybe a little bit differently than most of the project, which start with code and blockchain and then try to prove the business. We come from the other side. We started with business, with online marketplace. We are now applying blockchain technology to improve it.
So from the collateral perspective, how do you make that legally binding with these hard assets? You know, obviously, when you're collateralizing, you know, like Maker or Celsius, people that are pledging digital assets, you know, it's going from one wallet to another effectively. How do you bind this legally with these other hard assets?
So first through partnerships, yeah. So there's not, we think, no other way around. So we need because it's a real, like I said, a real world project, and it's not that, as you mentioned, that easy. So we do see option at some point to make it totally digital, but all over the world, I'm not sure we're already ready for that. You probably know some projects related with mortgages in DeFi, and they trying to handle that. So we want to focus where we do have our expertise. So solar, clean energy, moving finance, connecting all the dots, and through partnership initially, because you need some real world entities initially.
Sorry, I need to be the
Thank you.
timekeeper. Manu, go ahead. Try to be brief.
Yeah, thank you, Michael. I think that you ask at least my top questions. That is, related. How do you liquidate a defaulted credit? What are the insurances that you provide to the lenders? And that is also related to one more thing, that is, how permissionless do you want to be, and how decentralized do you want to be?
I did know that it's going to be a hard meeting without Chris, my CTO. So again, gotta be honest and move some.
Just write down the questions and we send an email to. I'll put you in contact. So that's
it's
perfect.
better this
No
way
problem.
than I hustle right now. Yeah, but I can answer one of your questions, Manu. So as banks or leasing providers secure themselves all over the world today, yeah, so we want to copy that initially and then inject that into blockchain with smart contracts. So it's not easy to connect both worlds, offline, online, and we want to do it gradually. So that's what I want to say right now. Banks secure the loans, and we want to copy that and gradually move it step by step on blockchain.
Okay. Thank you very much.
Brooke, go ahead.
Yeah, sure. So appreciate the questions that our colleagues have asked. And so I guess maybe taking it a different direction, as I sit and talk with lots of investors, if I was in their shoes, I would want to understand, what is the geographic focus, specifically at a countrywide basis, country by country basis, because I would be concerned that your project, if you're in Poland, but you're maybe doing something in Australia, you're biting off too much than you could chew. So I see execution risk. And so I'd want to understand, in addition to vendor financing and the perfection of liens that Michael was asking, how are you going to execute, and do you really need to have the blockchain component nailed on day one, or do you foresee kind of rolling out in the kind of a traditional business plan and then putting it whatever you need on chain? So curious to hear your thoughts on geography and then the blockchain component of this business.
We believe in blockchain and scalability of it. So we do see potential that if we start more in a traditional way, more offline way, with all the collateral and stuff, we then gradually see moving it to blockchain. So it is the strategy to start more in a traditional way, and we see it already happening here in the market. So we are coming from the business. Yeah, we see, and we're making money in it. So we see we can do that. And I'm glad you asked the geography question, because I mentioned scalability a couple of times probably already. Gotta be honest that the project got a little bit exhausting looking on the traditional business side of it. If we either install the systems or have to put too much focus on working with installers, let them do the job. We have so much experience that we see a way to start in a new geography, making less money initially with only 2 partnerships. One for a broker for the loans and providing the collateral in the traditional way, and the second partnership with distributor. So we don't even have to maintain any warehouse or have any stock ourselves. So that's step 1 in the strategy. If we want to move to Mexico or Australia, we need 2 partnerships in a specific country. So it is really lightweight. Money moves fast, and material, so stock, is just e-commerce. And we are doing this, and logistic isn't that hard. So initially, we want to start very lightweight with less margin, less money, and then gradually, after a year or 2, after proving traction in a new geography, we can invest then into stock in that geography and make more money and deliver more APY to initial investors.
Okay, Robbie? Try to be quick.
Hey there, yeah. Thanks for those previous questions. I also align on kind of the necessary blockchain component. I'm curious, as far as the evolution of the company over the last 8 years. Like you mentioned, you've tested some of the previous models. What was the trigger that told you, blockchain should come into the fold? Why did it become a necessary component, kind of like over the course of those few years? What did you learn that pushed you in that blockchain direction?
Well, blockchain is the future, or DeFi is the future of financing. And financing is, I see personally working my ass off for the past 8 years here as the missing component here for creating a really scalable business, a marketplace in the renewable sector. So I tried, and we tried with the team to find a product market fit in various ways. Yeah, either trying to build a pure marketplace, but if you don't control the money, you don't control the transaction, then you have to chase installers for your success fee. So that's not scalable. If you control the money, so somehow you control the installations, then you have a lot of trouble. So it's not scalable. So if you inject capital into this whole picture, you control the money, you don't have to control the installations. So that's the sweet spot, and that's the scalable strategy that we propose right now. Yeah?
Got it. That makes sense. And just quick follow-up to that, as far as the implementation or the role that the token plays in the capital marketplace for the environmental projects. Is it kind of is your vision to include the token as part of the funding for each of these projects? Or is it more of a governance token to facilitate the decision-making of which projects are funded?
Honestly, it depends. Either we go the token offering way. Right now, we do already have some conversation with Swiss investors. So if we find pure VC funding, then we don't necessarily have to use a token. If we don't, I'm scrappy enough with the team that we will do it anyway. So somehow, yeah. So it really depends. We do know I don't like corporations, so that's why blockchain is the future, in my opinion. So we're gonna use the token definitely, DAO to give people their voting power. But if we will always use the token to finance our growth, it's not decided yet.
Thanks. That's great. So guys from AthleteX, if you want to start presenting, thank you, Pavel. Really good.
Thank you.
Hey everyone. Yeah, Kevin Camto here from AthleteX. I think I arrived a little late, so I didn't get to intro, but let me share my screen here.
Yeah, try to keep it in 5 minutes.
Yeah, absolutely. Can you still see my screen?
Yeah.
All right, cool. Yeah. So intro to the project and then a brief intro into me, right in the middle of it. So AthleteX, Athlete Financial Prediction Markets. Hey, so my name is Kevin Camto. I lead product development and strategy over at AX. A bit about me personally. It really depends on how far back we go, but really I'm a computer science student based here locally at my university, and I've been a practicing entrepreneur. So my story really started in high school. I had to get an internship, joined a local business that I saw really become something meaningful. From there, I just met with the entrepreneurs in my circle, fell in love with the art, came up to university and said, I want to build my own thing. And this is the result of it. So what is AthleteX? Really starting with the problem statement of what's going on right now and why this product needs to exist. So right now, institutional investment in athletes is the norm. And there's no way for a more open and more accessible way for people to put their money in athlete. Right now, there's sports betting, but sports betting is not investing. Betting is more of a binary win-lose option and less of a risk curve option that allows for you to sort of have a bit more flexibility. And then the last bit here is that traditional markets really take advantage of users and use their data and sell their data, i.e. Robinhood. Their model is really relying on their users here. And here's our solution. AthleteX is an athletic performance prediction market. So we use cryptocurrency and blockchain technology to empower fans to harness their sports knowledge for long-term investing. What does that mean and how does it work? Here is a screen capture of one of our old prototypes. And so as you can see here, APTs are these athletes whose market price goes up and down based off of traditional investment metrics, right? Liquidity and market performance, and then their book value, which is based off of their actual in-game statistical performance. Here's another screen cap, which shows the details of the athlete, their key statistics, and then their price overview, where the market price goes up and down as the market anticipates where the book value is going to be. Here is the trade page, which allows you to trade from our native token, AthleteX, into these APTs that we've created. Keeping it brief due to time here, in terms of where we are in our life cycle. So we're here really building out the MVP. These first 6 months or so, we finally wrapped up something that's really functional and usable, if not quite pretty, right? We're starting off by providing the economic infrastructure for on-chain prediction markets, just like you saw in those screen captures. So what makes us different and why will we win? We really do have a totally unique model here, centered around these athlete performance tokens, which allow for, instead of a binary option like betting does, a more risk curve option. So you can take a long or short position on an athlete. And we have plans, of course, for NFTs, which are super popular in the space, really around digitized memorabilia. And of course, we have our DAO governance and in the process of really setting up a solid institution for the maintenance of the protocol. So what makes us different from our competitors or people in our space? Us being a DeFi native product, we have a more liquid opportunities for more liquid and decentralized markets, especially compared to people like Bovada or Robinhood, which are a bit more centralized, have the same limitations that those centralized institutions bring, and may have less liquidity because it's crowdsourced from fat investors instead of just a more decentralized approach. So here's a bit more about the macros that we're leaning into. We've created a sports prediction market, so we're leaning right into the online sports betting, which is a multi-billion-dollar marketplace. We think, that our product offering is unique enough to stand on its own within this, and so we're pursuing a more of a blue ocean strategy, if that means anything to you. Speaking of strategy, here's our go-to-market strategy, which we're right in the middle of. We have these partnerships already in place. SportX is a business. I think they're coming up on about 200 million in volume this year, crossed about 100 million at the start of this year, and they are launching a blockchain, which we will be building on top of and launching too, which gives us, direct access to their audience of hundreds of thousands, if not millions of users. We started with a go-to-market strategy with some of our partners here, like Defi Slate, Blockworks, and of course, integration with Geyser and Uma, which I was just on call with Chandler right before this. This speaks a bit to our token allocation. So the pie here has already been divided, to be upfront. We put up a bit of our token in a pre-sale to raise investment and really to prove out the demand. A year or so ago when we were building this, we were like, does anyone want this? Is this something that the marketplace wants? And we were able to prove that out by securing, I think, 135,000 just as a proof of concept here. This just dives in a bit deeper into our token allocation, what's set aside for advisors, for the treasury, community sale, and etc. So this is already in motion, meaning that these tokens, not all of them, of course, but some of them have already been distributed to the relevant partners and people that are already a part of this project. This is our budget allocation. So, we are a startup, right? A scrappy startup, and what we need, a really clear need that we have, is to form the right relationships with capital partners, and those that might be interested to make something really meaningful. There's only so far that I can take this, right? And for things that really matter, like legal and tax advising, smart contract development, and these things allocated in the budget, we really need to work with those that are already in the industry we're looking to hit and have the experience level that we want to work with. Closing out here, sports finance is coming. We really are ahead of the pack. We've created a new category to present to the world, and really it's a matter of time. There's no doubt to this company's success, and we hope you choose to be a part of it.
Thank you. So let's do Michael, Manuel, and Brooke. I guess, Robbie, you know the project well, if you just want to say a few words at the end. So in order to save time, we still have another project to present. So Michael?
Just very quickly, it looks very interesting. Certainly like the concept, it's a big market. How do you see yourself differentiating your product from a product like Joey Krug's Augur? And then I guess the second question is it even necessary to differentiate? Is the market that big that you need multiple players, et cetera? That's kind of it.
Yeah, Michael, I'm glad you brought that up. And there's two straightforward answers. We really do stand on our own. And it's not just me saying that, but me speaking for the community. They call our concept SportsFi, so sports DeFi, right? Augur isn't even in our sights, right? They're targeting a more broad approach, if that's the word, right? We're really focused on sports and this bringing this model to sports athletes. In terms of so that was how do we differentiate against Augur, and then is the market big enough? Yeah, if you're familiar with the blue ocean, red ocean strategy, right? We took a bunch of existing things and essentially presented a new way of thinking about these things. We're not in direct competition with SX, for example, because we're not sports betting, right? We call ourselves sports finance. And translating to scalability and why we would beat something like Augur and how we get to a size like SX is really straightforward, right? And we see the demand for it. People are like, when is Formula One coming out? When are you going to do NBA? When are you going to do NFL? Yada, yada, yada. And we feel extremely confident that once we introduce more and more of these markets, once you're able to take, for example, a long position in Tom Brady against a short position in Seth Curry, I don't know why you'd ever want to do that, but you'd have the ability to do so. And we really think that by that time, our tokenomics really start to kick in, and we'll see something really interesting here.
Manu,
Thank
you want to go?
Yeah, a couple of questions. First is blockchain. What do you think that your biggest challenges will be? Same question about permissionless or not, if this is going to be 100% permissionless due to legal things that you were saying. And the last question is, what is I just read that you have a APT token, then a native token, AX token. So what are the difference, and why do you exactly need a token, if it is just for funding or for something else?
Yeah, Manu, I'm glad you brought that question, because they're intrinsically tied. So the difference between an APT and AX, and then what is our biggest challenge? So, aside from the normal stuff, right, that every business goes through, we really anticipate, in terms of the blockchain, our biggest challenge will really probably be our tokenomics at scale. And here's what I mean by that, right? When we created AX, the token, we created with 100 million in mind. How the system works, and this is extremely important to understand, is to create an APT, these athlete performance tokens, you need to lock up our native token AX. So what that means is right now the lockup is 15,000 per one APT. So you as a user will buy 15,000 AX tokens from an exchange or wherever, go to the platform, and you want to use the platform because you want to make money and you want to invest in your favorite athletes. So you lock up, take all that AX out of circulation and put it into the system to take a position on Bryce Harper or Aaron Judge right now. What that means, so over time, so one, it is permissionless, right? We do not act as market makers. We don't have any custody over anybody's tokens, none of that stuff. It's all inputted by individuals that want to participate in the system. which again gives us an advantage over guys like Robinhood or Celsius, where in the event of a bank run or high market volatility, we reap the trading rewards, and then we would watch people exit the system if that scenario happened, right? We're not in charge of people's funds. That's not a concern of ours.
Good. So
where,
Okay. Yes.
Yeah.
Last question. How do you plan to? I worked with prediction markets long time ago.
let me interrupt.
since-
Sorry, Manu.
Yes.
If everyone is okay, do we extend it by 10 minutes, 15 minutes? We still have someone else to present. So it's really up to everyone. If everyone is okay,
That's fine.
yes?
Yeah.
Okay, so we keep the conversation going. So if it's fine, we extend it 10 minutes. Sorry, let's do it.
Yes. One of the challenges were in these decentralized prediction markets is how do you resolve the market? And there you
Great
have
question.
oracles, there you have like human involved oracles, automated oracles. So how do you plan to do that?
Yeah, you're asking all the right you're asking all the right questions. I'm just glad we're prepared with the answers here. So that's not even something to stress about. So core to the mechanisms of how these APTs work is they are priceless by design until expiration. So what does that mean? That these tokens really do have their market price. They're priced by the market until it's time for the season to end. When these contracts expire, they settle into their book value. Since it seems to be a really important part of what, an important part of understanding, let me spend another 2 minutes diving into like how these tokens work and what the mechanism is behind them. So, you as a user, you post up 15,000 AX as collateral, meaning that you lock it up and receive these long and short token pairs, giving you a delta neutral position on the market. To take a position on an athlete, you sell one of the tokens back to the market. In this case, an AMM, right? Just like a Uniswap. You hold that until the season ends and it's time to settle. What settling means is that the 15,000 that was locked up gets spread in a linear scale out between the long and short tokens. And it depends on how close the athlete's price is to the two bounds that it's set in. So the range of the bounds is 15,000, just like the collateral. So the closer that Aaron Judge's price gets to 15,000, I think right now he's trading at like 9 grand or something like that, 9,000 AX. That's how much tokens get allocated to the longs and how much tokens get allocated to the shorts. So there's never too much money in the ecosystem. There's only ever as much money as what's posted up in these underlying tokens. As the price fluctuates within the bounds, the tokens get allocated to the long and shorts. So that means that only when it's time for the contracts to settle, and let's say Aaron Judge nukes it this season, and his price is actually trading around like 2K AX. That means that of that 15,000, 13,000 is allocated to the shorts because the price is closer to the lower bound, and the other 2,000 is allocated to the longs. Does that answer your question?
Yeah, kind of. It will take more time. So
yes, discuss it offline.
Yes,
keep each other contacts. Yes. So Brooke, I guess you have great insights as well, right? From Nixon.
Yeah, well, I also have the opportunity of working both in the traditional sports gaming space as well as in the prediction markets. So would love to read again to Manu's comment. Want to kind of dive into how you've are running the project. But I guess 2 quick questions. What's the liquidity during a season? You talk about it being locked up. What happens if I want to? I mean, you can only trade at the beginning of the season and then you're boxed out. And then secondly, you spoke about working with SportsX. Is that going to be the source of liquidity and not the Dow Treasury that's going to be able to create the other side or depth in the sportsbook? My term, not yours.
Brooke, yeah, you're a sharp guy. So let me address those 2 points, starting with the second one first. SX, are just some guys that are passionate about crypto and blockchain. They're building something awesome, and it was a mutual opportunity, right? Also, SportX, AthleteX, match made in heaven, right? No, they are not liquidity providers. It would be the treasury providing the liquidity that allows the depth. And actually, you can use the website yourself right now. Go ahead and buy some AX, mint an APT, and you will see you'll get killed by the slippage. I would know. I've been using it. It's terrible. And then can you repeat your first question to make sure I address it?
That was if you could step in and start buying during the middle of a season. That was one question.
And
then unwind. And so then maybe ask a different question quickly. What is the traction? How many users do you have on a daily basis? What's the depth of your the traction you've gotten thus far?
Yeah, I'm glad you brought that up because it ties into what you said you were asking about earlier about how the project is run, right? I'm not you. I don't have your depth of knowledge and industry insights and experience. It started off as a a bunch of college kids kicking the can. What if we did this? And now it's like, oh, this really has the potential to be easily like a multi-million-dollar project, right? Right now, in terms of traction, we really probably have, around 10, maybe definitely less than 100 users on the platform, right? We haven't tried very hard to go out and get that market of users just yet. We started that process with the podcast, with things like this, and with some other things coming up down the line. Where that process will end is with the SX deployment. They launched a DEX of their own for their blockchain, and we saw overnight 7 million in TVR, right? So we're not stressed about finding the users, especially because of this SX alignment. Our biggest stressor and our biggest need is to work with people like you who have done this a million times, know the right connections to make, know the right ways and the right jurisdictions to be in, and essentially make sure that our launch goes even smoother than we've been able to make it so far, and really to build a resilient, sound, and mature organization and a mature product along with it.
Great. As I said before, this was to connect everyone, right? So Brooke, feel free, everything will be shared. This was just to, get everyone to network. So shall we go? Sorry to cut you, but we have like 15 minutes. So shall we go with Wallchain, Max? Go ahead. Wallchain.
Okay, I'll go. Hi everyone, my name is Yuri and I'll do it real quick. Let me share the screen. Okay, here it is. Can you see my screen? Yep, okay, cool. So we're called Wallchain, and at Wallchain, we help decentralized finance projects get extra revenue from arbitrage, and we also protect their users from bad actors. By bad actors, I mean random bots that do front running, back running, sandwich attacks, and different kind of like malicious behavior. So far, we've handled more than $500 million of total transactions volume for our users. And before we get into details, let me introduce our team. The Wallchain is founded by me, Yuri, and my friend Max, co-founder. We are both repeated founders. We both have backgrounds coming from Google and Meta. I'm a Y Combinator alum, and Max is a PhD in machine learning and is a former Grammarly research lead. So the problem is bots. Bots attack DeFi projects, decentralized exchanges, and get revenue from user actions, from user transactions. And this revenue, these profits are created by users and DeFi project owners, but captured by some random anonymous bots. So like transactions on blockchain create profit opportunities because of like different prices on liquidity pools, and these are all captured by random bots. And we provide a solution for them. We protect their transactions. Our solution consists of API and Wallchain protocol. On our API side, we calculate different predictive strategies, which will protect the user transaction and capture revenue for them. And Wallchain protocol, which executes those strategies, captures the profit inside the transaction and shares the profit instantly with the user and with exchange owner. So here is some example. I can actually show you in the more real example right here. You can still see my screen like this transaction right here, right? Like this swaps. Yeah, I believe so. So this is how regular swap looks like. It may look a bit more technical, but I can easily explain it. That's how users swap tokens on blockchain. For here we have Polygon chain. So someone is swapping like $50,000. It's happening in this transaction, and right in next transaction, some random bot does this. They do arbitrage. They start with this amount and they exit with this amount. So they do $2,500 instantly in the next transaction. They get this money from user and from DEX operator. And what we do, we bring this money back to users and DEX, like DeFi project owners. The exchange that I have like just showed you the transaction of, they have integrated our solution, and that's how their transactions look like now. Here it is. So someone is swapping tokens here, like root token to USDT token, and then we arbitrage them in the same transaction. So we are not coming next in the next transaction, but we do it in the same transaction instantly. We capture $900 of profit here, and we give back 80% to them and keep 20% for us. That's basically a business model. We keep 20% of what we capture to us. Yeah, and here we can monitor one of our smart contracts, where we like get profit from this transaction every other hour. Yeah, we are launched on Binance Smart Chain, Polygon, launching on Ethereum mainnet, and Avalanche next month. Yeah, we are part of Orange DAO. Our contract's been audited by Paladin, and all of the security check done. And here are some of the decentralized exchanges that we work with. Regarding the market opportunity, it's expected to be a $10 billion market for arbitrage capturing in the next 5 years. And by providing the protection layer for users, we will enable next billion users in Web3 in the next 5-7 years. So here's our roadmap. Right now, we provide, like, overall this industry is called MEV. So we provide MEV protection, and we have $500 million in transaction volume. So the plan is to onboard all major decentralized exchanges, then onboard major centralized exchanges and trading platforms. We are already talking to FalconX, and we are also preparing an aggregator as a service. Maybe you've heard of 1inch. It's like a decentralized exchange that aggregates and provides the most efficient swap of your tokens. We build it as a solution for exchanges, like a B2B solution. We already provide a custom solution of this for ApeSwap. This will bring us to 400 billion monthly transaction volume. And as a next phase, we will cover more edge cases of end-to-end protection for users, provide DeFi and Web3 games identity gating, means only humans will be able to access the Web3 game, and only once. That's basically the plan. That's our roadmap. As I promised, I keep it short. So that's it. Thank you. If you can provide an intro to any decentralized exchange or centralized exchange or trading platform, we'll be happy to have it. Thank you.
That was the point of the event. Perfect. So Michael, let's start with you. Let's use this 8 minutes.
You know, I'm gonna pass this to Manu, because I feel like I've been capitalizing on a lot of these timings. So, and then maybe if there's extra time at the end, I'll follow in.
Okay, Manu.
Yes, I want to know how the solution works.
Sure.
So that was, let's set up another meeting later. We are one of
No. It's just like miners extraction value is it's quite complex, and it's very close to miners, or otherwise you will be front running other front running bots, which in the end is a race to the bottom in terms of fees to pay. If you just can explain like very quickly, what is your key differentiator?
Sure. So like miner extracted value is the value that can be extracted by reordering the transactions that go to the blockchain. So if you put your transaction before or after some like interesting transactions, some transactions that is profitable, you can extract value from that. But in our protocol, we don't put our transaction next or before, because we are inside the transaction, so we can do anything we want with the actions that happened in the transaction and go to blockchain. So we skip the MEV, we skip the validators because we are inside the transactions. So we outbid all of the possible bots 100% because we are inside. We don't compete with them who goes before or who goes next.
Okay, so you do sandwich protection. Well, you are doing the sandwich, and that is a protection.
So there's like front running and back running. We protect from front running because we execute strategies after. And if there is profit for back running, like arbitrage after the swap happened, we capture the profit and share 80% with users and the DEX operator, keep 20% for us. And if like when we do that, front running or sandwich attack is not possible.
Yes, I understand. And what do you do with the 20%?
What do we do with 20%?
Yes. Will you have to sell a token, or it will go to a treasury? Will you distribute it with users? What will the protocol do with the 20%?
Yeah, great question. Right now, we just keep it on our smart contracts for us as our revenue. But we are thinking to launch a token, and so this revenue can be distributed within token holders. We are not focused right now on launching the token. We are focused on scaling to more exchanges, and scale first, and then like once we scale globally, launch a token later, and not to double focus on other things.
Great, thank you. So let's let Brooke. We don't have much time. Brooke.
Oh yeah, thank you.
Manuel,
I appreciate
the contact. Yeah,
great. Look forward to reading and learning more, and do appreciate you being kind of focused on delivering value in the project before trying to grow and get bigger. And it sounds to me like if you're capturing 20%, what do you need 3 million for? You're going to do that in a day.
Oh,
explain to me the use. Explain to me the use of funds.
You mean the 20%?
Well, you're saying if you're picking up $900 on one trade, you're going to hit 3 million pretty quickly. But you're looking at, and you're keeping that yourself. But you're looking for the 3 million. So I was making a little joke when I talked about it. I imagine you're going to be very profitable.
We are not taking 20% of the volume.
Of the profit, right?
Yeah, and the profit is like 0.05%.
I thought you were using examples where it was making $900 profits and $1,000 profit.
No,
so forgive me, I misunderstood.
It's equal to like $30,000 revenue per month.
Right. So explain to me the use of the 3 million.
Sure.
Where is that going?
So we need 3 million to hire blockchain engineers and get some B2B sales solution to manage all of the exchanges, manage all of the like centralized, decentralized exchanges, trading platforms, and more blockchain engineers to scale on every blockchain, provide custom solution to every customer, like not maybe to every, but some of them ask for some like custom functions that they need, like multiple like some of them want some customization. So we need more blockchain engineers, basically.
Great, thank you.
Robbie, we haven't forgot about you.
Yeah. Hey, Yuri, I just have two quick questions. One,
Sure.
I think was kind of where Manu was pointing to, which is, you know, the MEV bots are currently running almost on every decentralized exchange and aggregator out there now. So is your service doing the MEV on behalf of the user so that these malicious MEV bots are not attacking the trade? You're doing them as a benevolent service and then redistributing some of those profits?
Yeah, that's absolutely correct. I wouldn't say on behalf of the user, I would say on behalf of the exchange and of the DEX, because we integrate with exchange and they help users capture that. Yeah.
Got it. And as far as the B2B model compared to the B2C model, are you considering any like private deployments of the MEV bot for, you know, individuals or funds or exchanges, or what is the reasoning for integrating at the protocol level?
Why don't we run arbitrage bots ourselves?
Well, yeah, or provide arbitrage bots for private clientele. What's the reasoning for providing them to the exchanges?
Yeah, so like actually it all started a year ago when me and Max, we wanted to run these bots ourselves, and we found it to be a really competitive and not that scalable market, meaning like it works kind of different on each blockchain. Sometimes you need to pay for gas. Sometimes like on Avalanche chain, you need to have like a validator node. Like there is some threshold to enter it on every blockchain. Strategies change. So we decided that would allow us to outbid all of the bots 100%. That's Wallchain protocol, and this is the only way to outbid all of the bots 100%. And that's where we double down and have all our focus on, because that's like the ultimate solution to MEV.
Got it. Yeah, I missed just a brief part of that. I think the internet was cutting out a little bit, but I got the concept. And yeah, we speak to quite a few decentralized exchanges and protocols on the podcast. So I'm happy to connect Wallchain with those projects to make that introduction. So thanks.
Yeah,
Great.
accepted interest. Thank you.
So thank you, guys. Robbie, that's perfectly the example of what we want to achieve here at the Startup Club, connecting VC smart people, help them get visibility. So I hope everyone enjoyed it. We went over 10 minutes, but it was tough. So we will post the videos. All of the information will be available at the Startup Club website. And I'm happy, guys, if you guys want to connect with each other, just write to me and I put you everyone in touch, okay? I have all of your contacts. So it's been amazing. Hope you enjoyed it. And thank you for assisting.
Thank you.
Thank you.
Thank you.
Great to meet
Bye.
everyone.
Ciao,
Thank
guys.
you.
Bye.
Have a great one.
Bye.
Peace.
All the best.
Cheers.
Bye.